Now, the hours between markets closing on Friday and Monday are the opportunity for major financial moves that would otherwise cause market chaos. So all weekend, frantic negotiations have been taking place in Switzerland to deal with the troubled banking giant Credit Suisse. It is 167 years old and has over $1 trillion of assets under management. But it seems likely in the next few hours it will cease to exist, with reports of either a takeover or possibly nationalisation. Earlier this week, Switzerland's central bank tried to prop up the bank with a £45 billion rescue package, but that doesn't seem to have stopped customers withdrawing money and its share price sliding. It follows a turbulent week for the banking industry after two banks in the US collapsed. The Financial Times' markets editor, Katie Martin, is here now. Well, Katie, it is a kind of breathless turn of events. And what is the latest in terms of this UBS bid for Credit Suisse? How close are things to actually happening?
Well, I hope very close. This is an extremely fast-moving situation. It's never a good sign when you've got the entire FT banking team working flat out for the second weekend in a row. It tells you something is wrong. It looks like the deal that's coalescing right now is for UBS to buy Credit Suisse. Effectively, the shareholders in Credit Suisse will be pretty much wiped out. They'll lose a huge amount of money. This is an incredible Swiss drama, apart from anything else. UBS and Credit Suisse are arch rivals. They have this kind of convention whereby they don't speak each other's name in public, and it looks like Credit Suisse is just going to be consumed into the UBS group. Credit Suisse has had a number of issues for years. It seems to step on every rake it can. It just keeps smacking itself in the face in a way that says to investors that risk management is not what it should be there.
But I mean, the extraordinary haste of events in the last few days and the way in which, you know, the Swiss National Bank has intervened suggests, doesn't it, there's a real fear of another financial crisis?
Oh, absolutely. And that's exactly what authorities in Switzerland and also across Europe are really trying to avoid right now, is for this to infect the rest of the banking system, particularly in the Eurozone, which had a horrible experience with banking weakness after the '08 crisis. What they're trying to do is construct a deal that doesn't too badly affect bondholders in Credit Suisse, investors that hold your pension and mine. They want to avoid them taking too much risk, so taking too many losses, so that those investors in turn don't pull back from other bank bonds across Europe, and this ends up just sending out little tendrils across the European banking system. We've already seen a couple of days of quite heavy losses in share prices for European banks that really have nothing to do with this situation. So when markets get a bit panicky, as they have been recently, it can spread really quickly, and it's just important to set up a fire break and make this just stop at Credit Suisse.
Will it, though? If Credit Suisse is sold, will it do the trick? Will it stem the panic? Or is there a lot of fear on the markets when, you know, as they open tomorrow?
There is quite a lot of fear. I wouldn't overstate it. Banks are generally much safer beasts than they were in 2008. But we have seen a situation that you referred to in the US, where a number of small banks have encountered problems, had to be taken over by regulators and authorities. And at every step, we've said, OK, this is done now, this is done now, this is done now. And at the back end of last week, it was clear that even with the support for some small banks from the really big guys like Morgan Stanley and Citi, that it just wasn't stopping.
But hundreds of billions of dollars have been poured into banks in the US and then Credit Suisse as well. It suggests, doesn't it, that people are doubtful whether those reforms after the 2008 financial crisis will actually have worked.
Situations are not quite exactly the same. So Credit Suisse has had difficulties for years. The US banks, however, they folded actually pretty quickly. They were fine one minute, they were gone the next. And that is a function of what's happened with interest rates. So inflation has swept higher across the world. Central banks have had to jack up interest rates really, really quickly to deal with that. And we've just found that some of the small regional banks in the States have just hit a wall and have very quickly been unable to make ends meet. The big question is, can central banks keep tackling inflation without throwing the rest of the financial system under a bus?
Well, you took the words out of my mouth. What's your answer to that question?
As of Thursday, the European Central Bank, for example, stuck with its plans to raise interest rates by 0.5 percentage point. And that's the ECB's way of saying, this is fine, we've got this under control, we're going to stick with the plan. But there's going to be a series of more interest rate decisions from the Federal Reserve in the States and elsewhere over the coming days. And it's going to be fascinating to see whether they think they can stay the course and whether they think they can do this without upsetting the financial system.
What's your hunch?
I was really hoping you weren't going to ask me that, Katie, but my
I noticed you cavilled like a politician there.
My hunch is that they can stop this because authorities know how horrible it is when banking crises really get rolling really quickly and when they just become indiscriminate selling across all of the banks that we know and have our money parked with. They don't want that to happen again, and I think they will do everything to make sure it doesn't.
But in terms of interest rates?
In terms of interest rates, I think it's reasonable to expect that they won't be able to raise interest rates as quickly as they previously expected.
Right. And recession? More likely or less after all this?
Definitely more, because especially with the US banks, one thing that lots of regional US banks are going to do now in light of what's happened over there is get a little bit stricter with who they give money to and on what terms and at what cost. And if lending becomes more expensive out in the States, then there are certain sectors that are going to really find life a bit more difficult than they were before.
Katie Martin, thanks very much for joining us.